You can get a mortgage even if you're on a skilled worker visa or if you've just arrived in the UK. In this video, I'll explain the three things that determine how much you can borrow. Watch to the end because I'll also explain what you can do that your application will be viewed as if you have a UK passport. Now, you might need a specialist lender if the following applies to you. So I'm going to explain what a specialist lender is and why you might need one. So, what is a specialist lender? A specialist lender is a lender who might specialize in doing mortgages for people who aren't your vanilla customers. So, what we consider a vanilla customer is someone that has a UK passport, someone that's full-time employed, not on probation, and is PAYE, someone that has a relatively large deposit and has really good credit. So if you fall outside of that, it doesn't mean that you won't be able to get a mortgage. It just means that you may need to go to a specialist lender. Now, specialist lenders are reputable businesses. They're not like these back marketplaces, and quite often they are sub lenders underneath major brands, but they just specialize in helping people that have different circumstances that aren't as straightforward. My name is Anthony Lindsay, and I've been in finance for over 30 years. So I'm here to explain things to you in a way that can help you and that you can make informed choices. So specialist lenders are going to be great if you haven't been in the UK that long or you're just arriving in the UK, if you have credit issues, a low deposit, or if you're non-PAYE, so full-time employed, not on probation. Now, as far as time in the UK, it's going to vary. Different lenders are going to have different minimum thresholds. Some lenders will lend to someone on a visa from day one in the country. And I'll explain that a little bit later as to how you can trigger that particular criteria. Other lenders will require you to be in the country 12 months or 24 months, and they'll also look at how long you have left on your visa. The next thing that you're going to want to consider is your credit profile. Now, depending on your credit profile, you're going to have different options on who you will end up with, what specialist lender. So remember, your credit profile is not necessarily your credit score. I've seen people with credit scores of 850 and above not be eligible for loans with Main Street lenders, whereas people that have had credit scores of 720 have. So what lenders are looking for is the way that your credit is managed, not just the score. So they want to see that you don't have missed payments, late payments, that you don't have CCJs or defaults. And if you do, they're looking to see what you've done since you've resolved whatever that bump is. So if you have a CCJ, what you want to do is make sure that you pay that off. If you have any defaults, you want to satisfy those defaults. Remember, if you take a settlement amount, the difference between what the actual amount was that you owed and the amount that you settled for will stay on your credit report. So whenever possible, pay off the full amount that it will show on your credit report as settled. So criteria number one is your length of time in the UK, and criteria number two is your credit profile. The third criteria is the deposit amount. Now, some people may understand what loan to valuation is. For those of you who don't, let me explain. The loan to valuation is the difference between what the bank is lending you and the price of the property. So let's just say you live somewhere where you can get a property for 100,000. If you pay down 25,000, that would be a 25% deposit. The bank would only be lending you 75,000. So that would make the loan to valuation 75%. So if you do not have a UK passport, it's probably going to be difficult for you to be able to qualify for a 5% deposit, but it's not impossible. So what you'd really be looking at realistically is anywhere between a 10% deposit and a 15% deposit. But 5% deposits do exist, and if you need one, I can help you out. So make sure that you look at the information in the description, contact me, and we can go through your personal circumstances. But just to manage your expectation, the 5% deposits are going to be more difficult to find. So, what changes everything? If you are on a skilled worker visa, here are a few things that will make it more likely that you are treated as if you have a UK passport. Now, the first one would be if you have an income of 100,000 or more, and in some cases, combined income of 100,000 or more. A lot of lenders, when they see that high income, they'll view your application as if you have a UK passport. So you'll qualify for the higher loan to valuation, so like 95% loan to valuation. And a lot of the other hurdles as far as the time in the UK will be erased. The other one is if you're married to a UK passport holder. If one UK passport holder is on the mortgage application, quite often lenders will view that as a UK applicant. Okay, so if you're married to a UK passport holder, you can get over a lot of the hurdles. The other thing is if you have a 25% deposit, most specialist lenders or even high street lenders will lend to someone that has a skilled worker visa or has credit issues, even if they have those things, they'll lend to them if they have a 25% deposit. So if you're looking for a mortgage and you feel that maybe you won't qualify, it might be that you won't qualify with a high street bank. However, we do have specialist lenders that specialize in helping people who haven't been in the UK that long, possibly have some credit hiccups, or maybe they have some more complex income situations. So they're contractors or they've just started a new job. Specialist lenders can help you. As a bonus, I'm going to share a few tips to getting the very best mortgage for you. And remember, getting a mortgage, getting legal advice, or getting financial advice is very, very personal. So don't get your information from some guy on TikTok or from some person on social media. Social media is a great place to get general information, but then you should go and speak to a professional who can understand your personal circumstances, someone who is licensed and someone who is regulated. You can move your savings into one high interest savings account. It will make the whole process of getting a mortgage a little bit easier because if all the funds are in one place and you're getting some decent interest on it, it will be easier to track those funds, especially if those funds and that savings is coming from your income being put into the savings account. The other thing is close any accounts, any subscriptions, not credit card accounts, but any subscriptions that you have that you don't need. So what you want to do is reduce your outgoings. You want to make sure that you're only paying for things that you actually use. This is a good exercise anyway. You should check out your standing orders and check out your direct debits to make sure you're not paying for products or services that you no longer use. So tidy up your direct debits, tidy up your subscriptions. If you have any small credit cards that you can pay off, go ahead and pay off those small credit cards and make sure that your bank statements are tidy. Make sure that you're only paying on things that you're actually using. My name is Anthony Lindsay, and if you're looking for a mortgage broker, I'd love to speak to you. I don't charge for a conversation, and hopefully you found this information valuable and helpful. I'm here to support you if you need a mortgage and if you are looking to purchase anytime within the next 6 months.